U.S. nat gas futures fell below $2.70 despite an impressively hot pattern the next several days over the interior U.S., with highs of 90s to 100s for very strong national demand. However, the pattern for August 27 to 31 remains only slightly hotter than normal. Although, much of the weather data is teasing a hotter than normal pattern returning over much of the U.S. September 1 to 7. Looks like investors anticipate that cooling rains from Tropical Storm Harold will bring relief to the heat in Texas. The U.S. National Hurricane Center predicted that Harold would make landfall along the South Texas coast on Tuesday. Additionally, U.S. gas output showed a slight dip in August from 101.8 billion cubic feet per day in July to 101.7 billion. Also, gas flows to major U.S. LNG export plants decreased from 12.7 billion in July to 12.3 in August, largely due to reductions at Cheniere Energy's facility in Louisiana. Meanwhile, we should keep in mind that the potential strike in Australia, along with other bullish factors, could support an upward trend in natural gas futures. Mixed demand and varying weather forecasts introduce volatility, but supply disruptions, especially from a significant player like Australia, are likely to have a pronounced bullish effect on prices. At this time, the focus seems to be on the mixed weather demand outlook, but this could change quickly if a strike is announced. European natural gas futures rose more than 6% to above €43 per megawatt-hour, the highest in 10 weeks, as investors monitor negotiations over potential worker strikes at facilities in Australia. These strikes could potentially commence on September 2 if talks between Woodside and unions on August 23 failed to resolve disputes. From a daily technical viewpoint, gas is trading on the weak side of its daily pivot at $2.70, but above the nearest support at $2.60. The long-term technicals are still bullish, but the short-term outlook indicates a developing downside trend. Overall, the technical indicators collectively paint a picture of a market that is leaning toward the bearish side, with caution needed for a potential reversal to the upside after September 2. The $2.60 level provides strong support, indicating a high probability of natural gas rebounding from this level. A sustained move over the pivot at $2.70 will indicate the buying is getting stronger. This could lead to a near-term acceleration to the upside at $2.75, the nearest target. Don't forget to smash the like button and turn on your notifications bell if you enjoyed the video. See you in the next one.